Hello, it's Doc Severson for the Theo Night Report for Thursday, February 2nd. All right, I'm starting off tonight's report looking at a tick chart of Amazon here, so you can see kind of the last few days of Amazon has ramped up into the earnings report here. So this is Tuesday, here's Wednesday, and you can see a little bit more volume because of the fact that this is a tick chart. So it's only going to print a candle based on so many transactions. In this case, this is a 333 tick chart. So every 333 transactions, it's going to print a candle. So you can see that there's just more volume here. And then as the report came out, wham. So I didn't look and see what the problem here is, but as I hover over this thing, the estimated earnings per share was about $1.40. And versus $1.54 actual. So this reaction tells me that there was something else on here, more than likely a top line revenue number that missed, or perhaps forward projections were also something that people are going to be looking at very strongly here. Either way, right now, Amazon is about 30-40 points underwater. Now, how this translates out to the daily chart, let's look at the daily chart here. Now, when we look at this on just a fractal grid here with the monthly, weekly, and daily price charts on here, I don't see anything that's really stands out right now other than the fact that we are just in this nearly infinite slope on the monthly chart. And that can typically start to be a problem. The other thing I'm seeing too is that when we've typically seen the monthly chart for Amazon get down into this area, and we're very close, this is showing the linearity of the current trend. And the linearity of the current trend right now is getting to an exhaustion point. And typically when we see that, we will see sometimes several months of consolidation in here, sometimes several months of consolidation, or an outright pullback. Now, the very fastest way to have the price consolidate is through a very rapid pullback like this in the opposite direction. What that does is that disrupts the linearity of the current chart and basically pushes the reset button for the trend and the linearity and in fact, the energy on here. So there was nothing on the chart that tells me that we should have had a bad reaction. Sometimes you can kind of anticipate this. Usually what you find is that there is a narrative that's created that meets the requirements of the chart. So when I see a chart that is dying to consolidate or dying to pull back or perform some kind of, or even break out, usually there's some kind of narrative that fits what the market wants for that. In this case, I don't really see anything other than the fact that we are getting very close to an area where we might start to see a very large consolidation zone or just an outright pullback in Amazon. So that is a real issue right now, especially with the double top that we're showing up here. So again, with the price coming down to about 800 right now, that by itself is not that big of a deal. And this could just create the next higher low, but we'll see how the market does deal with this tomorrow. Now, I think overall, the market right now is having a real issue with this. And I think the poster child for this is actually the Dow Jones Industrials. I've been beating this up about how we have multiple exhaustion points here. So the linearity of this breakout that we've had over the last 14 months has now put this into very precarious territory where typically we will see some type of reaction. Even if it's just 1 month to the downside, that can be enough to reset the clock here. But this weekly chart is just beyond exhausted and does need to at least pull into a larger consolidation zone than this tight little thing that's up here, right? So pulling down to maybe something as low as 19,500, maybe even lower than that, would certainly do that in a hurry. And after rallying for the last straight 2 months plus on here, coming up on 3 months now, the first red candle that comes out of any size, people are going to lose their minds. And this is actually going to be a good thing because we can use that in our favor. What this is going to do, this fear and this panic of red candles is going to create implied volatility. And how could it get any lower than what it is right now? Looking at the VIX shows how low this is, and now we're getting into single digits again, if you can believe it. So we actually had a low print down here. Hopefully that's a good candle, but we're getting very, very close to that low print down there at 939. 939. So we're close to single digits again, and that is a warning factor when we get that complacent with current things. We're moving away from a market that is going to be buoyed by the Federal Reserve, right? So there's going to be opposition in place towards the Federal Reserve doing anything for this, because perhaps the opinion is that maybe they've done too much already in the wrong direction. So the market is on notice that it's going to be by itself pretty soon. But right now, the volatility indices are not reflecting that. There's still just too much liquidity out there, and there's the rates are still too low for there to be competition. Now, the fun continues tomorrow morning with a non-farms payroll. So I'm not sure how important or market moving this is going to be, although if it's a low print, this may not necessarily be a situation where bad news is good news, right? Before in the past, bad news was good news, because if it was bad news or really, really bad news, that meant that the Fed was on the sideline or would continue printing, whatever. Now, if we have a market pretty much on its own with animal spirits to fend for itself, then these numbers might become important after all for what they are. So right now what we're staring at tomorrow morning, 8:30 a.m. Eastern time for the January numbers, is consensus 175K. Prior was 156. My concern here is that we're starting to see this non-farm payroll, right? As the former administration backs out the door here, we're starting to see this trend to the downside. Is this something that is a concern, or can the new administration turn around this trend quickly enough that we don't have a very, very rapid reversion to the mean that prices this in? I personally think that things are about to get very, very interesting in the markets. Again, we have been for many, many months without a red candle. And when we finally do get some mean reversion, it's going to get some attention, and this is going to make us very, very happy, because it allows us to trade many more strategies that are out there. We have many more options to be able to trade. That's it for today's report. Thanks for listening, folks, and we'll see you tomorrow.